Hey everybody, welcome back to another episode of A Millennial's Guide to Real Estate Investing. Today I have Candice Bakx-Friesen with me. She has a large portfolio of rental properties with her husband. She's also a real estate agent, coach, trainer, and successful entrepreneur. So thanks for coming on the show today and excited to talk with you.
Yeah, thanks so much, Antoine, for having me.
Yeah, so first of all, where are you? You're in Canada, correct?
Yeah, right in Winnipeg, so right in the middle, prairie girl. Yeah,
Awesome.
lived here forever. Yeah.
Forever. Did you go to college over there as well?
Yeah, so our main city is Winnipeg. I actually live rural, and that's something that we can touch on too, but all of our investing is rural where I live.
Oh, wow.
So it's different towns and cities that are like 15,000 or less.
Oh, wow.
Yeah,
Okay.
so it's very different, and that's something that people are often quite interested in. But yeah, so when I was young, then I had always, even I think grade 7 or 8, I was starting to study personal finance, or it's a little bit nerdy, but it is what it is. And so yeah, I kind of always knew that I would be doing something with finance. And so my aunt was sort of somebody that was a role model for me, and I looked up to her a lot. And she was an accountant, and so just sort of naturally, I was like, I think I should be an accountant too. And so I went to university at the U of M, University of Manitoba, and got my Bachelor of Commerce. And I was going to be a career woman, no kids, no husband, just driven, make this happen.
Yeah.
And never say never is the big takeaway, because now I'm married with 4 kids, so things change.
Yeah.
Yeah, so and after meeting him, things just changed, and I didn't want to necessarily become an accountant anymore and just sit at a desk every day. And so I became, I went into banking, and I was a mortgage broker for a little bit, and now I've been a realtor for 12 years. So I met my husband when I was 17, kind of between high school and going to university. And we got married when I would say almost 20.
Wow.
But I'm a little bit of a get her done kind of personality, as you could tell. So like, okay, well, this is working. Let's just get on with things.
Yeah.
Not not date forever. And yeah, so we got married young. And when I met him, he had 2 rental properties already. Now he's 4 years older, so he would have been 21.
Okay.
And I was like, okay, so tell me about this rental thing, because my parents didn't have rental properties. That was something pretty foreign to me. And he's like, well, when I was 17, and my dad's like, you should go buy a rental house. And I was like, no, Dad, like I don't have money for that. Like,
Yeah.
how am I going to do that? He's like, well, you've saved up a little bit of money, and just go and buy the house. Like, it'll be fine. He's like,
Wow.
well, no, like, what if the hot water tank goes, or, some of these big things that can happen? He's like, it'll all work out. Don't worry about it. Just buy the house. So with a shaking hand, he signed the mortgage document
Yeah.
and bought his second one about a year later.
Wow.
Now, this was mid 90s. Prices were a lot lower. Now, of course, our market's very different from yours. Our average sale price right now is 310
Okay.
in Winnipeg. Rurally, it's probably about 280. And several years ago, right, over 20 years ago, he bought his first tiny little house for 30,000,
Oh,
right?
wow.
32,000. Yeah.
Yeah.
So yeah, he needed $8,000 at that time. And people listening will say, oh yeah, well, that's not realistic for today. It doesn't really matter, right? There's always different struggles that people have. At that time, 32,000 was still quite a bit, right?
Yeah.
$8,000 was still all he had at that point, right? And so even if we can say, well, hindsight's 2020 is another thing, right? Oh, I should have bought so many rental properties back then. It doesn't matter. You need to take action today.
Yeah. Absolutely. So did you start as a real estate agent and then eventually got into the investing side of things after being an agent for 12 years, or how did your progression, your husband had these 2 rentals, but
Yeah.
did it take a little bit of while for you guys to scale those up?
Right. So he had the 2 properties, and then we wanted to move to a different area, which was closer to the main city, because at that point I still did want to become an accountant
Yeah.
when we got married, and I was sort of halfway through university. So he's like, well, maybe I'll sell the one house so that we could take that equity and put it into our own house.
Mm-hmm.
So at that point, we had our one house, our own, and then we had the one rental property. So about 2 years later, we were looking at, actually his dad had just mentioned to us, like, there's that fiveplex in town. And we're like, yeah, he said the owner's name. And he's like, well, I heard through the grapevine, at the local coffee shop, right? I heard that they maybe want to sell. So maybe you should give them a call. So I'm still in university. My husband's working and he had a labor job. So he did stucco and actually did for 20 years. He just quit this past year. But so he's like, maybe you should talk to them and we could work something, maybe you could work something out.
Yeah.
So I said to my husband, I think this is a really good idea. And he's like, no, like that's 5 units. Like, how are we going to buy 5 units?
Yeah.
So at that time, again, 5 units was 200,000. So about 40,000 a unit.
Yeah.
So again, I know that sounds like not very much money, but we had no money. So it was a lot of money.
Yeah.
So I talked to my mom and I said, you know what, Mom, like we would really like to buy this building, but we don't have any money. So what would you think about doing a private mortgage? And I said, this is how it works. This is what we're thinking. These are the numbers. Let me know kind of what you're thinking for an interest rate. And that's how it came together. So we used private money to buy our first unit together, which was 5 units. So if we were looking at the property itself, then it was like this. So it was a piece of paper. It was a rectangle piece.
Yep.
And the one building took about this much space. And so after we bought it, I said, well, you know what, there's a lot of room on that land, so I think that we should build another building.
Oh, wow.
And again, my husband's like,
Hell no,
that's crazy. Yeah. And, this is normal with couples, right? And I think that's an important point, too, that one person is typically a little bit more of a risk taker and one pulls back. And we always attract the opposite, right? And so we ended up building another building just parallel to it. And then the parking was kind of in the middle. So the cool thing about that property, or that project, I guess, was the property in that it came with a lot of land, which gave us options for the future.
Wow, that's awesome. And then how did you guys come about financing that? And did you build another 5 units, or how many units did you build?
We built 4. The building looked about the same, but the units were bigger. And I couldn't call my mom, obviously, because Mom already helped us. So I called my grandma. And my grandma's a very entrepreneurial person. She was passed on already. But so I said, hey, we've got this project and I'm really excited and I'd love to do this. Like, would you be willing to do a private mortgage for us? And she's like, yeah, sure. That would be, let's do it. And it was kind of interesting because that was a build. So usually you're going to have draws and you're going to have, with your progress draw, you're also going to have appraisals and all these different things to satisfy the bank. And in this case, it was like, you know what, we could just put the money in your account and you can just use it as you need it. So we didn't have to do a lot of those sort of, have the hassle of that when we're already building, which is a big project in and of itself.
Got it. Yeah, and I like what you said about couples having the push and pull effect, because my parents just sold. So we're from Toronto. We moved to San Francisco in 2000. We bought a house when we moved here, which we thought was a ridiculous price because it was like triple the amount that our Toronto house was worth. And we took all our money, put it into this single family home in San Francisco, and we just sold it last year. And the push and pull effect was, my dad was the entrepreneurial guy, the risk taker who wanted to sell the house and use all that equity to do something else with it. And then my mom's like the more emotional person about the house, and she wants to have a home and she wants to have all this kind of stuff. So it's the natural push and pull. And eventually, after 2 years of convincing her and showing her how much equity we're sitting on in our home, and the return of that equity is nothing. Right. And it could be gone if one thing happens to the market in that local area, or if the market crashes, then, that's money just being burnt.
Exactly.
And that's disappearing, that you can't tap into anymore. So there's you're on a time limit, a time crunch to take that equity out before it's gone because you don't know what could happen to that.
Yeah, exactly.
Yeah. And so
Yeah.
what did you and your husband, after you built these 4 units, did you guys complete it and then do a cash out refinance on that building and get an actual permanent loan on it?
Yeah, so we had, so after about a year, then my grandma said, well, I'd actually like that money back. Now, again, with an investor that's not your family, you can say, well, actually, we need 6 months, or no, we got a 2-year contract. But, when it's grandma, it's really hard to say no, right?
Yeah.
So that's where we said, oh, wait a minute, no problem,
Yeah.
right? And then we got the financing, and my mom was willing to be second, so she was cool with that. And so we just ended up continuing that. That's how it currently is too. My
Got
mom's
it.
still second, the bank is still first.
Got it. Okay. And
Yeah.
then did you and your husband, so through this whole time, were you still in accounting, or were you a real estate agent at that point in time?
Shortly after we bought and built this, then I had my first child. And at that point, I was in banking. So that was my one maternity leave. And after that, the opportunities, again, being very driven, the opportunity to go from university and to be able to move up quickly through the banking, it just wasn't going fast enough for me.
Yeah.
They had said, and I think when you come back, we're going to have a position open for you. That's going to be a bit of an analyst, but it was a new position. And so about 7 to 8 months into my mat leave, I had just checked in, right? And I said, hey, how's that going with creating that position? And they're like, oh, we're still working on it. And I sort of knew what that meant. So at that point, I ended up changing gears and became a mortgage broker.
Yeah.
At that point, so that's about 13, 14 years ago. And in our area, that was a very new concept.
Yeah.
So it was, I liked the idea. I was like, this is great. I'm still doing the banking stuff, but it's not, I don't have to wait for somebody else, right? I have control over my own destiny. So, yeah.
Okay. And then after that, did you guys start buying more and more property? Because it sounds like that 5 unit that you bought was kind of close to town, right?
Yeah. Yeah.
Then,
so
yeah, go ahead.
most of the properties are sort of within an hour of where we live.
Okay, got it.
Yeah.
And still today, most of the properties are?
Yeah.
Okay, got it.
Yeah.
So one of the things that I look for, so I invested in Memphis, Tennessee, Cleveland, Ohio. So my purchase prices, even though I live in Los Angeles, I invest all the way on the other side of the world because the prices are way better for the cash flow, right? So that's where it's cash flow heavy. We don't get as much appreciation as here in Los Angeles, but that's what I'm looking for is the cash flow. So I had to go all the way to the Midwest to find that. But one of my criteria, which is, unique that you're saying rural, is mine is like, I hate rural and I want to be as close to the city as possible because that's, in my opinion, that's where the jobs are going to be. If jobs leave, then at least these people are still going to, at least the turnover, I can fill that unit back up. Right. So you being rural, what's your philosophy on doing that? I know that tons of people have had success with that, but what has your experience been owning rural rental properties?
Right. So rural for me is within an hour of the main city.
Okay.
So we're not like 5 hours away.
Okay.
We're still an easy commute. So people that live in our area, some of them are going into the city to work and coming back every day.
Yeah.
The rural thing is nice because a lot of times people know other people in small town. So you have a little bit the watchdog thing, right? And you can also say, do you know so-and-so? No, but I think my friend does. Yeah. And so you've got a little bit of that connection.
Yeah.
And so you don't have as much of the midnight move. You don't have as much damage because everybody kind of knows everybody to an extent.
Yeah. And do you think that then in turns into longer tenants staying longer? Because now that you're saying that, it's like if people are part of their small little rural community and everybody kind of knows each other and commutes to the city, then they kind of want to stay a part of that community and everybody knows them around there. Whereas then if you're in a city, it doesn't matter if you live on B Street or A Street or D Street, you're still in that town. Have you seen then tenants staying longer, like a number of years?
No, not necessarily. But they'll stay in the area, but because our sales prices aren't super high, people can afford to get into a home fairly quickly. So they may only be renting for a couple of years and then maybe they're looking at buying a house. So they're not necessarily staying longer,
Yeah.
but they do often tend to stay in the area. Yeah.
Okay. Got it. And
Yeah.
then for property management, how many do you guys do that all yourself because you are still an hour away from all your properties, or do you have a property management company you guys use?
Yeah, I did. So I really believe in diversifying. It's very important to me. And so my husband had his career, I had my career. Now I've developed a little bit more of the coaching. So it's almost like two careers I kind of have going on at once. And then we actually ended up investing in a poultry farm. And so he's doing that as well as stucco for 5 years. And
Yeah.
now he's transitioned to just doing farming. And so I'm not the kind of person that's like, oh, I want to quit my job tomorrow. I
Yeah.
actually really love my job.
Yeah.
And, if things don't go well with my real estate career, we have the rentals, right?
Yeah.
And so I really feel like that's important. Just like having life insurance, it's just one more piece of that pie to make sure that you're very well diversified and stuff like that. So anyway, I was doing the rental thing, taking care of our properties,
Yeah.
being the realtor, doing the coaching. So when I was pregnant with my last child, which was about 5 years ago, we had maybe about 25 doors. And I just said, all right, like I'm out to here
Yeah.
running around with real estate. Something's got to give. So we found a property manager and they were actually fairly new starting. And so I said, how about you take 2 or 3 and let's see how this goes. And then after 3 months, if it's going well, how about you take a few more doors, right? And so slowly we offloaded our whole portfolio to him. And he's been doing our property management for about 5 years.
Awesome.
So the thing with him that was kind of unique was there were property management companies, but they like to take the 50 units. They like to take the big buildings.
Yeah.
And there was nobody who was doing a lot of the small stuff. And so he was able to pick up a lot of investors, even who had 1, 2, 3 units. I think I was kind of his biggest client at first, but just a lot of people that have 1, 2 units that are like, I just don't want the hassle.
Yeah. Gotcha. And then so you had 25 doors 5 years ago. How many doors do you guys have now?
I don't know exactly. We picked up a 6-plex last year, again, using private money for the down payment.
Okay.
So the bank was okay with doing the 75%.
Okay.
Yeah, and then we did a private mortgage for the other 25% on that one. So that brought us up a little bit higher, but we're probably around 40 now.
Okay. Awesome.
So something like that. Yeah.
Awesome. And then so they're mostly, do you guys have many single family? It sounds like you have a lot of the multifamily side, the smaller multifamily.
Yeah, we diversified quite a bit again within properties, and we don't want them all within one small town, so they're sort of spread out a little bit.
Good.
So we have one building that's a mixed use. It's commercial, 3 commercial units with 2 residential above. Again, to kind of
diversify,
mitigate risk. And then we've got some single family, some duplex, and then some multifamily. The biggest one we have is that 9-unit one.
Okay.
It was 5 and then it became 9.
Yeah.
And other than that, we've got like a 4-plex or a triplex. So a little bit of a mix, yeah.
Got it.
Because multifamily has its benefits, but single family has its benefits too, right?
Yeah.
So.
And what are the benefits in your opinion to both, to single family versus the multifamily? Because I have my thoughts, but I'd like to hear yours.
Sure. Multifamily in general is a little bit easier to manage. So you've got one parking lot to clear, one visit to talk to everybody if you need to, right? Or collecting rent, whatever that is. It's one roof, and instead of 5 different roofs, things like that. Single family, and then with multifamily, it can also be many problems at once too. And that's the thing that people don't really talk about enough. So if you've got a 50-unit building, that's awesome. But if you have one tenant that's making the lives of 20 tenants upset, right? They're making it rough, then you've got a big problem, right? You got 20 people calling you saying this tenant is bothering us.
Yeah.
Or bed bugs or things like that, right?
Yeah.
It could be a big problem quickly. or the market changes, you can't find renters, you've got vacancy times 50, right?
Yeah.
So those are the risks that can come up, and they're bigger risks. So a single family, alternatively, right, is smaller problems, but then the costs per unit are typically higher.
Got it.
So if you run into problems and you've got to sell something, you should be able to sell a single family
Yeah.
home quicker, liquidate to get the cash than 50 units.
Got it. And have you guys thought about liquidating your smaller side of your portfolio? For example, the single family homes, liquidating those and turning those into 15 units or 20 units. Have you guys thought about scaling upwards?
No, we want to keep some small stuff always,
Yeah.
and then have some big stuff. Yeah.
Okay.
So we're going to have both
Yeah.
forever, probably.
Yeah. Yeah, and the other thing is too is with your markets being more rural, there also probably isn't a lot of inventory for the 20 units or 50 unit buildings in those rural areas, correct?
Right.
Yeah,
Yeah.
it's harder to find those. I'm surprised that you were even able to find the 5 or 6 units, because like for me, for my markets that I invest in, I probably invest 20, 30 minutes outside of the downtown, so I'm still in the suburbs. But a lot of the suburbs that we invest in were built in the 60s. So it's mostly all just single family, same exact style homes built. And the whole neighborhood looks exactly the same.
Yeah.
And there's not really any apartment buildings built, because just back in those times, they didn't have a need, and everybody wanted to have their own American dream single family home, you know?
Yeah.
Yeah.
The cool thing about what you're doing is that in that time, they probably have 1 or 2 builders, and they built the whole area, right? Because the houses all look the same.
Yeah.
And so if you have a comfort level with the quality of a certain area, likely that builder would have built all the houses the same quality.
Yeah.
So that's the cool thing about what you're doing, is that you have that comfort level of everything is the same.
Yep, exactly. Yeah, and it makes our guys who do the rehab a lot easier too, because every single home is the same and built the same, and it has the same slab and has the same year that the slab was built, so they can check and see like the same problem. If there is a problem that comes up with all of these homes, it comes up on every single project, right?
Exactly.
Whereas I have friends who flip houses in Los Angeles, and one house may be built in the 80s, one house in the 20s or 30s, one house in the 60s, and then all different styles. You have the Spanish style home, and then other different styles of home. So when they go into a project, it's kind of, if they've never done a Spanish style, then, you know, they kind of have to, every house was built different and built by a different builder. There wasn't just a couple builders who built all of Los Angeles, you know, so it makes it a little bit more difficult.
Yeah.
Yeah.
I think that's, I don't know if you've addressed this in your podcast recently, but I think it's really important to really highlight too that flipping is so different than buy and hold. Yeah. And a lot of people love the excitement of the flipping, but just to make sure that you still have that long-term focus, that you've got that wealth, you know, and even if you're not thinking kids and you don't have kids yet and legacy or any of that stuff, but just that later in life, you've got that nest egg, because I think we all underestimate how expensive it's going to be later. And it's easy now to be like, oh, let's grab the cars and let's just have the vacations, and especially with things like social media, right? It always looks fun and exciting. But just to really keep in the back of your mind, you know, the future.
No, I know it's super important, because everybody wants to flip a house and get a $200,000 check and then go show off, right? Or go on vacation, right? So you're right. The social media thing does make a difference. Whereas for me, I've never flipped a house like as people like in Los Angeles and made $100,000 check. I've never done that before. Every property that I've bought is a, you know, $250 per month per door kind of thing. And then there's not much that I can show off. Because I'm not gonna take a picture of a $250 check and put it on Twitter.
Yeah,
right? So,
exactly.
But it's like you're gonna make that $250 for just one property for the rest of your life until that house is paid off. Then you're gonna make $500 a month. And thinking long term is, because I'm a cash flow guy too. I don't really care about the flipping and making all the money. It's really building that long-term legacy. And I got into this business because my father didn't have a 401k account. He only had 40 grand in it. He's been working for himself for his whole life, and he didn't have any money saved up to retire. especially
Yeah.
living in the Bay Area, where one of the most expensive places in the world. It's hard to save up money, and working so much, then it's hard to grow a portfolio and a nest egg for your kids. And real estate kind of opens the door for that, because you can buy these rental properties and set it up in a way so that it can be passed down onto your children, or whoever's going to come after you, and pass that
Yeah.
off to those people. And it's like one of the few things that actually, where that does work and where it can happen. You can't do
Yeah.
that with your 401k or anything else like that.
Yeah, exactly.
Yeah.
Yeah, I think that's a key point again, is like the why. Like, why are you doing this, right? And making sure that your strategy matches your why. Like the cars, the fun, there's nothing wrong with that, right?
Yeah.
But if that's what it is, then make sure that your strategy just matches that. That's the key.
I agree. And then
Yeah.
what's your current, what do you guys think about the market right now? Are you guys still buying rental properties because the market is, I'm sure it's probably at its peak too. I think that does Canada's cycle follow the US's cycle in terms of real estate market? I'm sure it's pretty similar into and ingrained with our cycle.
Yeah, kind of. Yeah, we didn't get the crash that you guys did.
Yeah.
But again, then we're looking at real estate through a really, wide view, right? And real estate is very city specific,
Yeah.
state specific for you guys, but really all the way down to the neighborhood, right? And that's the different thing with real estate, that it's easy to say, oh, look at the market. Well, if people talk about the Los Angeles market, why would anybody care in Florida, right?
Yeah.
Yeah, but we look at these sweeping trends, and we're, that has nothing to do with anything. So if the U.S. was hit with the recession, well, it didn't really hit Texas like it did different cities, right?
Yeah.
So I think that's just another key thing to remember. And so even if the market doesn't look good, or they're calling for a recession in
Yeah.
the States and in Canada in 2020, right? But ultimately, you can still always find deals, and that's the great thing about real estate too, is that you just sometimes have to look a little harder, but there's always a deal out there. So it's as much, the more effort you put into it, the more you're going to find the deals.
Got it. Okay, cool. Yeah, and that brings up another point. So in Canada, can you explain, because I don't think you guys have an MLS, do you, or a multiple listing service? Do you guys have that?
Yep.
Oh,
Yep,
you guys
we
do?
have MLS too. Yeah.
Okay.
Yeah.
Because for me, when I was in Canada, my family's mostly in Toronto, and then I have some French family in Quebec and Montreal and stuff. But when I was up there, I was actually looking at real estate and trying to find real estate prices. But
Yeah.
things are done a little bit different. Like in the U.S., we have Zillow, Redfin, Trulia, which kind of take all the data from the MLS and publicize
Yeah.
it.
Yeah.
But can you explain a little bit about how the Canadian system works? Because I don't think there was no like Zillow, Trulia, Redfin for me to
No.
find properties.
Yeah, like our MLS system is very strong, and we didn't, in quotes, sell out to everybody else.
Yeah.
Yeah. And so, Zillow and some of these other companies, they're, why do you need them if you already have a strong MLS? You don't need anybody to promote you, just go straight to MLS,
Yeah.
right? Yeah. And so we do have still for sale by owners, but we just have our one system that really promotes everything. Yeah.
And can anybody
Yeah.
get access to that system?
Yeah, it's a public system. Yeah.
Okay.
So there's realtor data that's separate,
Got it.
which is which is pretty normal, I guess. But realtor notes and different things like that is more specific to a realtor. But again, people say, well, hey, you're a realtor, find me all the good deals. Well, as a realtor, we're supposed to be pricing houses fairly,
Yeah.
right? We're not supposed to be gouging people and stuff like that. It's crossing ethical lines, right?
Yeah.
And so sometimes people get frustrated as an investor to say like, well, why are there no good deals? Well, in theory, there's not supposed to be a good deal. They're all supposed to be priced fairly,
Yeah.
right? And to sell. So you really have to have the mindset that you got to be hungry and you got to be willing to look for those deals. And they're not always going to be on MLS, but you got to find somebody who doesn't, they've got a reason why they don't want it to be on MLS. And maybe that's that the house is a disaster and they don't want people coming through. They just want a quick sale.
Yeah.
Or they've got some financial issues and different things that can come up, right? So it's up to you as the investor, if you're doing the flips or if you're looking for a really good deal, to find them yourself typically.
Got it. Okay, cool. And then would you say that most of the deals that you bought have been through the MLS, or is there other things like wholesalers something that is also in Canada that people get a lot of their deals from as well?
Yeah, there can be wholesaling. Yep. There's definitely people that do that.
Got it.
I haven't really been involved in that as much. I've just mainly found my own deals.
Yeah. Through the MLS.
Often MLS, yeah. I'm trying kind of to think about all of them. But yeah, I'd say most of them were MLS.
Okay.
Yeah.
Got it.
Yeah.
Awesome.
Yeah.
And so you help other real estate agents also get started in becoming a real estate agent. Is that what you do full time besides the real estate investing on the side?
I'm a full-time realtor.
Okay.
So I'm, a pretty successful realtor, top 1% kind of in our brokerage.
Oh, awesome.
Yeah. So on top of that, I'm doing the coaching and the training for the realtors within our office. And then I do it on the side as well for other people, but mainly the realtors that are in our office. So the coaching that I do is, it depends on what the person's sort of looking for. Sometimes people are like, can you help me with my business? And then we do business coaching, strategy coaching. Sometimes people will call and say, I got an inheritance, I'm not really sure what to do. And that's a little bit more the personal finance, or help me with budgeting, help me figure this stuff out. So it really just depends kind of what people are looking for.
Got it. Okay.
Yeah.
Yeah, so you kind of do the full scope of life coaching for real estate agents, and then also about their budgeting and finance as well.
Yeah, and it can just be people that I know as well that are looking to start a business. Yeah, so it's not only realtors, like I help the general public as well. Yeah.
Got it. Okay.
Yeah.
Awesome. And then what would you, for a millennial who's a new real estate agent, whether it be in Canada or in the United States, what would your best piece of advice be? There's a 90% failure rate for new real estate agents in their first year. What piece of advice would you give to somebody who just got their license and is maybe hungry, looking to help people and looking to help people buy or sell real estate? What would you tell them so that they can not be that 90%?
Relationships are key, and we don't build relationships through social media. We build relationships face to face. So grab a piece of paper, figure out all the people that you know, put them on that piece of paper and start a database and start phoning and making appointments to do coffee and meet with people day one, and tell everybody that you know what you're doing.
Awesome.
And that your business is built on referrals. So a lot of people don't realize that, right? They think, oh, like you're really successful, you got it all figured out, or the phone just rings, right? But it doesn't, right? Even after 12 years, I still have to engage with people, and I got to make those relationships, new ones, and keep the existing ones strong, right?
Yep.
And you don't do that by social media. You do it face to face. And so communication is so key. And that's the same thing with being an investor too, right? You can't do it behind a computer screen. You can't do it from your phone. And, we don't have these interpersonal skills that are as strong as people who are 50 or 60.
Yeah. Yeah, I love that. And I say too, a lot of the times that we can use social media to get more cut out. I say that we can use social media to get in front of a lot more people, but then using social media to set up more in-person meetings. So it's driving traffic to your social media presence, which then drives traffic to the coffee shop so they can have that one-on-one with you or wherever that place may be. So getting as many eyeballs to you to be able to set up those appointments, and using LinkedIn or Bigger Pockets or email and following up with people too is, and making sure that people continue to know, like, you're that real estate person whenever a problem arises or an opportunity comes up, you can be there and help them with their problem or helping them have a successful investment. Yeah.
And it's the opposite too, right? After you've met them in person, of course, make sure that you're connecting with them on social media, because that continues, it does continue the relationship. But I think in general, all of us get way too lazy and we say, oh, now that they're on our Facebook
Yeah.
friends list, now we're good. Well,
Yeah.
no, you're not. You're not. Yeah. You're
Yeah.
not good. You
Yeah.
haven't arrived. Yeah.
Exactly. Yeah. Relationship is something that, yeah, you can't just plant the seed and then the relationship doesn't grow itself. You have to constantly be watering it for however long until that person is ready to work with you.
Mm-hmm.
Yep.
Yeah. And I often tell people, like, even last year, my mom's like talking about her friend and how she's thinking of selling or her kid is buying. And I'm like, well, you did mention me, right, Mom? And she's like, oh, sorry. So the people that are closest to you are not necessarily remembering. So you still have to remind people, right?
Yeah.
Still got to keep in touch and be like, hey, have you heard of anybody? Like, no, okay, no problem. Just, keep me in mind,
Yep.
right?
Yep.
Yeah.
Awesome. Well, thanks for coming on the podcast today. What's the best way for people to reach out to you if they have any questions about and want to reach out to you and maybe ask you some more questions personally?
Yeah, so investorsmarts.ca. So for Canada, we're .ca versus .com. And so investorsmarts.ca is my brand for, again, the finance and the investing and stuff like that. If they're a realtor, then there's another brand, but let's just focus on real estate investing today. And social media, yeah, I'm all over the place. Like being a real estate agent, you really can't hide, right? So
Yeah.
just to type in my name on social media, and yeah, I'd be happy to help your listeners just to be that sounding board if
Yeah.
they're trying to figure something out. And yeah, sometimes we just need a little pivot in our, we could be on this road, and sometimes we just have to pivot a little bit to get around something, and then we can keep going, right?
Yeah.
So it's just so important if anyone's struggling with something, just to reach out, get past that hurdle so you can keep moving.
Awesome. Thanks for coming on the show, Candice. And yeah, I hope I know there's some Canadian listeners who are hopefully going to be reaching out to you. So thanks again for providing all the information you did today to all the listeners.
Great. Thanks.
Thank you.